Hello guys and welcome to another video on TubeTrade. In this video guys, we're going to talk about MRF, Madras Rubber Factory. You must have seen the logo on Virat Kohli's bat, Sachin Tendulkar's bat, or even A.B. de Villiers' bat. Many of you might know about this company that it's the most expensive stock in India. Its value is at 78,000. Yes, you heard that right. In order to acquire even a single stock of MRF, you have to pay 78,000 rupees. Now, this video is not about that. What happens is when I tell this to people, the question which I receive is MRF the most successful company of India? Or is MRF the most efficient company of India? So here, I'm going to answer that question and I'm going to find the reason and explain it to you in a very layman way why MRF is at a price of 78,000 rupees. And let me tell you something, it's not the most successful company of India, nor it is the most efficient company of India, guys. So let's get on and let's unravel this mystery. So now guys, moving on to the explanation part of this, MRF, as everyone knows, stands for Madras Rubber Factory, which debuted as a public company. Public, by public I mean that the time they issued their share for public to invest in it, with a face value of rupees 10 per share, has delivered more than 740% returns to the investor in the last 25 years. Now this seems like the best company in India, right? I mean, any company providing this sort of return, people will go crazy, right? And 25 years is not a big time in stock market. If you guys are investing in stock market and you have long-term plans, then 25 years is not a big thing in stock market, guys. So 25 years, it gave them a return of 740,000%, guys. The script hit its lifetime high of 81,000 on April 30, 2018. So right now, as of now, today, by the way, is Friday, guys. Let me check what is the date. 23rd April is the date, and the price of this particular stock is 78,200 something, guys. I don't remember the exact figure. The all-time high was 81,000, guys, on April 30th, 2018. That's a very big amount. If an investor has purchased invested 1 lakh rupees in MRF when its price was 10 rupees per share, the corpus would have been worth 74 crore on April 30th, 2018, when the stock was at its peak. So you can imagine the rise, guys. If you have invested only a lump sum amount of, let's say, that 1 lakh rupees, it would have turned into 74 crores, guys. That's a huge amount. I mean, everyone likes that, right? Now, the question which we need to ask ourselves, is it the best performing company in India? Is it the most efficient company in India? Now, let's look at some facts before we make that sort of an assumption. During the January-March quarter, the tire manufacturer posted a 14.91% decline in its standalone net profit at 293.83 crores. So as you can see, it's posting a huge amount of losses. 293 crores is a huge amount of loss. And against 345 crores in the same quarter last year. So this is a figure. This was an article taken from Business Today. The source of all of this information was Business Today, and this article was published in the year 2019, guys. So if everything is right, then this is a profit of 2018. So in 2018, its losses were close to 345 crores, in that too in one quarter. We have 4 quarters in a year, so in one particular quarter, the losses was equivalent to this. So it clearly means that this is not the best performing company. In the last one year, MRF has declared an equity dividend of 6% on its face value, guys. 600% in total on its face value, guys. Remember, this is the thing which we need to focus on. It's the dividend is being declared on its face value, which was rupees 10 when it was given for the public investment, not the 81,000 or the 78,000, which amounts to 60 rupees per share. At the current share price, it's only equivalent to 0.11%, guys. That's it. That's it, which is very low compared to the share prices. Recently, Reliance also issued around 25 rupees per share, which is a very big amount as compared to its price. Its price was around 2000 something when it issued that sort of a dividend. So as you can see, if a company is only giving you 0.11% per share, it's not a very big amount for dividend. Okay, so the next question is reason for such a high price. Reason for such a high price, because now I've explained it to you in a very layman term. Because any company which is, if you want to become the best company in India, you have to perform on a regular basis, right? As you can see, we have seen that they are making losses. They are not giving a big amount of dividends. So it clearly means that it is not the best performing company in India. The question which we need to answer is why is the price so high? That's something we need to focus on. First thing, guys, MRF has never split its stock. Companies split their stock time to time, maintain liquidity. But MRF has never resorted to share splitting or issuing bonus share. Now, what is splitting of stock? I mean, I'm sorry, this is going way deep into the finance aspect, but I'm going to try and break it out in a very simple term. Let's say that you are an owner of a particular stock of a company, let's say ABC. ABC Limited, you own a particular stock of that company. Let's say that you own one stock of that company. Now, what will happen is that this company will see that there is very less liquidity in its stock. That means that if I want to sell this particular stock, I'm not able to find the buyer. That's basic meaning of liquidity, guys. I'm not going into the deep definition of liquidity. If you're a commerce student, you probably know what liquidity is. So basically, if I have one stock, I'm not able to sell it because there is no buyer in the market. So there is very less liquidity in that particular thing. So I own one stock. Stock split will basically split my stock, and this one stock is equivalent to rupees 100. So as the name suggests, there is going to be stock split, which means that I'm going to split my stock. The company is actually going to split my stock. Of course, I can't do that. So this one stock will become two stock, one stock of rupees 50 and another stock of rupees 50. Now, what will happen is that the prices will decrease, the outstanding shares will increase. By outstanding, I mean the shares which are being traded in the public. So earlier, I only own one share. Now I own two shares. So number of outstanding shares has increased from 1 to 2. The price has decreased from 100 to rupees 50, guys. Now, why do they do that? Now people who were not able to earlier afford this stock, its price was 100 rupees. People are not able to afford it. Let's say that I don't have 100 rupees with me. I can't afford the stock of ABC Limited, but I have 50 rupees. So now I can afford this stock. I want to buy this stock. So what has happened? We have increases the liquidity by bringing in more people into the buying and selling aspect of ABC Limited. Now, MRF has never done that. MRF has never decided to split its stock. This is one of the reasons why the share prices are so high, because with time, with inflation coming into the economy, with the economy booming, the price is of course going to rise. So company with time to time, they split their shares so that they can bring in more liquidity. Now, MRF has decided to go against that. MRF has never issued bonus shares to its investor. Again, this is another form of increasing liquidity. You issue bonus shares. So recently, Reliance also did the same. You can check that on any news article you want. So Reliance, if I'm not wrong, Reliance issued one share on every 20 shares you own. So if you own 100 shares, you would have gotten extra 5 shares of Reliance. So in this case, you're basically increasing the outstanding shares. Earlier, the outstanding shares were 100. Now they are 105. Okay, guys. MRF has never done that. MRF has never done that. And the reason behind that is they want a loyal investor base and a serious investor base. They want people to invest. Now, the prices of Reliance is, MRF is at 78,000 something. Now, people with small amount cannot go and buy MRF. But people who have good amount of money and can go for long-term investment will invest in MRF, guys. So in this way, they have created a base of serious investors, guys. I'm going to write it here. A base of serious investors. What do I mean by this? Serious investors. People who have good amount of money and have long-term goal, and they would invest in a company like MRF. Okay. That being said, what is another reason, guys? Another reason is that MRF does not want to take its ownership give its ownership to public by issuing the same amount of shares which they did in back in the day. They issued the shares. The public issue came in 1993. So ever since then, they have not issued more shares in the market. So what they have done is they have kept on their stake. People, board of directors, owners have kept their stake in MRF, therefore ensuring that the maximum decision making stays in their own hand, and there is no chance of hostile overtake whatsoever. I hope I have made you understand this whole concept in a very easy way. This is sort of a short video which piqued my interest recently because someone asked me this question and I realized, okay, many people ask me this question, so why not make a video out of it. If you like this video, guys, do subscribe our channel and do give it a like, and of course follow Tutorate on Instagram. We're gonna bring some really good content in the future. And again, guys, once again, thanks for watching. See you soon.